Now on the USDJPY, let's scale up into the 4 hours time frame where we want to have an holistic perspective into what has really been going on in this market since the first day of the month of May. Now, looking at the structure closely, you will see from an holistic point of view that price action has been bullish. And to emphasize the bullish momentum here, I was able to connect the series of higher lows, which has given me a couple of trend lines to work with for this week. And this further emphasizes the strength of the buyers in this market. And you know how we use our trend lines here. As long as price action remains above the trend line, we have no other choice than to look out for more opportunities to buy the USDJPY. And not only if the breakdown of the trend line happens that we want to start considering selling, unless structure states otherwise. Now, zooming into what has been happening here in the last couple of weeks, I have a couple of levels that we are going to be using to guide our trading activity for today. Now, one of these levels is the 140.750 area, a level which has been a strong selling niche since the last trading week of last month before we saw the final breakout of this level during the last week's trading session. We saw the breakout of this level here, and since then price action had continued to find higher highs. However, something interesting happened on the last trading day of last week, as we saw that as soon as price got to the 142.00 level, a very strong psychological level, considering the round figure of that price, we begin to see selling pressure resume around that area. Now, the question going into the new week here is that following this impulsive move that got us to this point, is the continued selling pressure around this area going to transition into a reversal pattern, probably in the form of a double top structure, to incite a retracement of this impulsive move, where depending on how price action reacts to either of these trend lines will determine if we are going to be joining a trend continuation to the upside, or a breakdown will incite a sell-off in this market. So these are the things we are going to be looking at today, but most importantly, we want to see how participants in this market will be reacting to that key level at the 142.00 level, as depending on what happens here will determine where price action is likely going to be going, at least for the first half of this week. So in order to have a better perspective into what is going on there, we want to scale down to a much more lower time frame, like the 1 hour time frame, where we begin to see things more clearly. Now, right on the 1 hour time frame, this was what I was able to spot here after trying to decipher how participants in the market are thinking. Now, the first thing you will notice on the 1 hour time frame is that the new week started on a bearish note. As you can see here, price action started at around the 142.00 level, our key level for this week, and we saw the bearish momentum pushing price into the 141.500. And as soon as price got here, we saw another wave of bullish momentum back into that resistance line to give us a flat channel to work with. And this also emphasized the level of indecision in this market too as well. And you know how we do it. Whenever we have this kind of simple setup, we want to wait patiently for structures to mature, where a breakdown of the support line will give us an opportunity to sell, and the breakout of the resistance line will give us an opportunity to buy. Now, I also want to let you know here that this whole structure we have here could turn out to be either a trend continuation pattern or a reversal pattern, which I said earlier could be a double top structure. As you can see, price is yet to comfortably break out of the previous high. So there is a likelihood that we could have a breakdown, retest of the 141.500, which could serve as the neckline of the double top structure to incite a bearish move. But in as much as we consider the fact that price action has been strongly bullish in the last couple of weeks, I had a buy stop order above the resistance line here at the 142.00 level to capture a trend continuation to the upside. Though my position is triggered right now, though I'm in loss right now, I'm in negative right now on this one, about -9 pips loss here, but I'm still hoping that price action will continue to the upside. But if you are not taking any position at this point, it is quite reasonable that you want to be having a buy stop order above the 142.00 level to capture this bullish move if it happens. Then you have your stop loss sitting somewhere close to the support line here, the 141.500, which will be dovetailing to between 35 to 40 pips stop loss. So I'm looking forward to a bullish momentum here. I hope that price will continue to the upside, and if it does, I want to be looking out for more opportunities to maximize the potential of that move. However, if price action drops and takes out the support line here at the 141.500, then at this point we could likely be seeing a reversal pattern to incite a retracement move. And remember, if the breakdown of the 141.500 happen, considering that this is a strong bullish momentum, we want to remain patient before joining any bearish move. So once the breakdown happens, you scale down to your lower time frame to look out for retest of structure signs that sellers are gradually gaining momentum, after which we want to be part of the bearish move. And then if price action continues to the downside to break down the 140.750 level, then definitely we want to be adding more position to our existing trade. So that is how we are going to be selling the USDJPY for today. Personally, I'm holding on to a bullish bias, but if price drops below the 141.500, we obviously want to be getting ready to be part of the bearish move. So that is my view here on the USDJPY. If you have any questions whatsoever regarding what I just explained, feel free to let me know in the comment section.